investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Friday, the 4th of April. We're looking at the Dow right now, down 1,083. The 1,000-point drops. It's quite something since that Wednesday tariff announcement. 39,461. So I'm going to do this. I want to run these quickly because there's a lot going on. The low from the low from the week of the 9th of August at 38,499. That'll be the next level of key support. I'll discuss a bunch of things as we move on. I'm just giving you the market as it stands right now because I need to just get through this as an opening salvo. Look at this in the weekly chart. The S&P went right through that resistance. Chapman Wave inside track repellent zone. Whoops, gone right through leg B to the downside. The monthly chart now is starting to look ugly, but that 9 is still way above the 14. But wow, this is really ugly. Look at this arch formation. You get a 1-to-1 to the downside. So 170 down at 52.26 in the S&P, and the day is young. Let's go to the QQQ. We're looking at minus 14.40 at 436.12. Now you're looking at the low that has gone through the August low, right? No, it's going to the August low of 423.45 at this rate, just another 10 points. But if there's going to be, well, no, I don't want to get into that just yet. Let's just go one step at a time. IWM, Russell 2000, very poor, a huge gap, down 8.5 at 181.10. This is really an ugly chart. Let's go now to I want to go to the SMHs, the semiconductors. Oh, look at that. Near the 200-period moving average of 174. Remember, we were discussing this. I said the moment we go under 198, that's a real problem, and it does look like it wants to get there. Well, today's down 10 at 185, and there's the arch formation that we're looking at, the lowercase h. We took it out in the monthly chart. We've not only done that in the daily and the weekly, we've now done it in the monthly chart. For the semiconductors, let's go on to the gold. Gold is actually rallied a little bit off the low earlier in the day, earlier this morning. Now it's down 51 at 3,071. Everything's being sold off. Peak D in the daily, leg D in the weekly, leg D in the monthly. Having done this extension that I thought was a possibility, but the way it happened was really a surprise to me in the sense that I had the measured move, but we still long the physical gold. We took right at the high. We took a little bit off. We've taken a little bit off. But I'm going to have to reassess at the end of the day to see what we do next. Meantime, silver. You want to look at a chart? Look at that silver. That is one plunge from 35.42 to 30.26. Man, that's horrible. Okay, let's go to high-grade copper. High-grade copper right there. High-grade copper down at the 200-period moving average, under it, down 34 cents at 4.48. We've been discussing for some time, I've been discussing for some time, since November, December, that there should be a consolidation in the tech sector that unfolds, and we would have to wait to see whether there's a rotation through other sectors. Well, there were some sectors that were holding up, but the tariff fear around the world, and I've spoken to a lot of people, different places around the world, that nobody has a clue. You remember, my theory always is that the market deals with uncertainty every day. It can't stand uncertainty about uncertainty. Just once removed, and then you're in trouble. So let's go on. We want to look at bonds. Bonds right now are trading up. $1.1130 hit 121.27 seconds. In leg D, we're going to have to see. This is the first time, as I said, for about 2 weeks or 3 weeks now, that the money has been flowing into bonds like the old traditional way when the markets tanked, like 1980. Oh, I'll talk about that in a moment. I'm going to show you some charts from the previous crashes. And money flowed into bonds as a safety factor. Well, it's done that this time, and I say there's something different about this, and we're going to have to monitor it very closely. Here's the yellow chart that I showed for a couple of days now. I said that's the key support that has to be held. It wasn't. That's the up channel, Chapman wave inside track propellant zone. Then it became a resistance zone, and now we've taken out the next level of support that I'd shown. So this is kind of important. Once again, this takes you to that low that was made back in August the 6th. This is the Dow chart, Chapman Wave Dark News Index. And boy, this is dark news. Let's go on. So now this is what I wanted to discuss. Did I finish? No. Crude oil took a huge hit over the last... Oh, I always do that. I forget that I'm on the yellow chart and I don't move. There we go. No problem. There. Look at that plunge. From a peak D, you're going down almost $6 to 61.37. That is huge. Okay, so now let's go to what I want to discuss. First of all, when I look for, let's forget about how we got here. Just look at it, where we are right now. Dow is down huge, down 1,200. S&P is down almost 200. So I always look for the volatility index to screen to the upside. Very often at 11 that you wouldn't even expect. But here, it's at 37, still not overly high. If you look at the history of this, it went to 65.75. That was that overnight Japan thing. I could never understand that. And I said, that's. So here I have the CBOE volatility index. So what I always like to look at is how it, in a monthly chart, how it screams up, and then a month later, everything's dissipated. So you've got your China, U.S. rates back in August of 2015. I can go even further back. Greece crisis, you remember, everybody forgot about that, when it hit 48 back in August of 2011. Bank crisis of 2008, October, hit 89.53. The crash of 1987, I think it went to, this is 89.53. Oh, I can't remember. I don't have it anymore. I used to have it. I can't remember it anymore, but it was screaming to the upside. So coronavirus back in March of 2020, remember that's where we went long. We still actually have long positions from there. So this is going to be very interesting because we had that big Japanese spike, Japan overnight spike, pulls back. And now look how and I've been talking about this for a little while, saying that there's a rising trend line in the VIX index, the volatility index. That's an emotional indicator. And that just said to me, from that low, that arch symmetry low, I said this is the week of I think it was the first, it wasn't yet the first week of March. It was the second week of March. I said, there's a chance that we could start moving higher. Well, we did do that. We went to 29.57. That was the 11th, the 13th. We got that low in the market, and we had a good run up. And now look at this. We've hit 45.56. So these are the things I look for. I look for the volatility index to have this spike. Usually it starts on the Friday, and then it ends on the Monday. That's the traditional. I don't think we can talk about that as a traditional. We haven't got any, unless, you see, if the market hadn't tanked, then Trump would have been able to use the tariffs as a bargaining tool. Right now, he's behind the 8 ball. He's trying to save the day.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Sorry, maybe I was cut off. I didn't quite hear the music. I've got my little stopwatch out there, which is always, I think it's 13 seconds ahead in any case. Here we go. So this is what I'm looking at. So the thing I look for is the volatility index streaming to the upside, number one. The next thing I look at is in the media. Usually I like to say that it needs to be your local newspaper, but that I don't mean the city newspaper, maybe your little village newspaper. But in this case, look, this is the Boston Globe. They couldn't wait to do this. So it's got tariffs shake the world. And I don't know if I can make this, I don't know if I should experiment now. But this was the front page right here. Let me see if I can read the paper. Is that it? No. Okay. All right, now I have to cancel it out. Pity. All right. So that was the Boston Globe. That's what I look for. I look for a low. Coming in very soon. Once it reaches your paper, in this case it is a city paper, not your local news. We don't get local newspapers anymore, and that's really important. But here we go. I wanted to show you some things that I'm looking at. So there was talk about the similarity between the chart formation from the 1929 high. I don't see that. Because here, look, this is 1929. This is the 1987 crash. This is these are all hand charted by me. And you look, this is a different chart altogether. There was a double top. Double tops, I've been talking about double tops in the market. It's particular stocks. The Russell 2000 did an exact double top, but over a period of time, a V-shaped formation. And then we came down. So that's a very different chart formation. However, this is the part that, because when I was doing my work last night, I said, Larry's just, every day he's nailed this market extremely well. He sees a relationship that is a little different to actually what I'm looking at, but his relationship it comports perfectly to what the market has done in terms of the selling. So bravo, congratulations, fantastic calls. Now what I'm looking at here, and as I said, for subscribers, we've mostly in cash. I've kept some of our positions and only to say, let them get to this original stop that we had, because we had huge gains in them. We've taken profits as they've come down right at the top. So most of them, we took something off. Now we've got much less. I said, keep just a little position and see if those stops are taking out, because if it survives over the next few days, these stocks, they're the ones that should have the nicest bounce, because they were the ones that were acting very well. Now, you see this arch formation right here? You see this arch formation right here? In time, that's probably closer, but this is pretty good. This is 1929. So at any point, we could expect a pretty decent bounce going from, in this case, for the 386.10 all-time high in the 300, remember? 386.10 in 1929, back on the 3rd of September. Look how you came down very sharply. Now, the number of bars down is very different to the number of bars down that we have at this particular time. But then you had that rally, and that rally went from 320.50 to 358. That's a pretty big rally. We only went from 40,661 to 42,821, which I mean, percentage-wise, that's very nice. Now we've taken the dreaded H pattern. Remember the dreaded H pattern in the Chapman methodology? We're going to see tons of those. We have seen them. It's where the price comes down sharply, tries to rally, and then fails at either an A or a B sometimes and go higher, but usually it's A or B. And then it takes out the left side low, and you can have a 1-to-1 to the downside, right? So that's the thing that we're looking at right now. The Dow's only started its break from the 40,661 to where we are right now, 39,300. If that matches, then there won't be much at all. We'll just keep going down and down and down. Look at this. In 1987, remember I was hand charting in those days. I did have a little Apple computer. I got information from that. Oh, and I also had one of those handheld things, and I can't remember what it was called, that gave you current prices. It was delayed, I think, a few minutes. So 2746.20 on the 25th of August comes down, has a little bit of a dreaded H pattern there, and then what happens is it stops and has a pretty decent rally. And my thinking is this might be closer to what we're looking at, in that it did the arch formation and then went underneath the left side low, and then there was some kind of a signal that said, we're going to have a rally. And we rallied, and I remember this so distinctly that on my hotline, I had a hotline at that time, and Fidelity was one of my clients, the head technical trader there. And it went to 2,640.90, and it had like a 0% change. It was like almost unchanged. It was down 0.18, almost 0% change. And I said, if tomorrow the market is down 60 points, can you imagine when you're trading at 26 and you say 60 points? That is a huge move down. 60 points or lower, that's a really, really serious decline coming. Well, of course, we got that decline. I never expected anything like this. And then it came down. So this is where I'm saying a lot of things are going to happen right now. You've got your extremely high VIX index. You've got your headline in the Boston Globe. But other things are saying to me that there's still uncertainty. And if this market hadn't tanked, then Trump would have had negotiating power. Now I'm not sure that over the weekend a whole bunch of countries are going to say, look, let's untariff. Let's just think about this in another way. Tommy was talking about the tariffs a little earlier. Very cogent, a lot of very valuable information. I've got emails from economists. One of the economists that I actually play tennis with, who is senior. I mean, he's a renowned economist in his field. And what is his field? Tariffs. And he said to me the moment he heard about tariffs, he said, this is weeks and weeks, months ago, he said, tariffs are the worst thing, and how they calculate it is important, etc. So all I can say is, I'm preparing, and what if we get, very often, look what happens when you get your major thrust to the downside, and then you get a low. Whoosh, you can go. So you're busy selling and selling and selling, and all of a sudden you get the V-shaped pattern, and it comes back, and it's even higher than where you were selling. You say, wait. Well, then what happens is sometimes it comes back down. That was the major low. That was in 1929. That was on the 13th of November 1929 at 195. You went from 386 to 195, 47% or something decline. Then you had a huge rally, but wait a minute. You had a huge rally into April. You had a huge rally into December, a pullback, another rally all the way into April. That was up to 297, and that was it. And then you just kept going. That was the Depression. All right. Remember, Empire State Building, paper signed summer of 1929. Building finished in the quickest amount of time. I mean, who wants it during a market crash and you didn't know there was going to be a depression? But in markets like this, you would have been, you wouldn't expect rallies like that. All right. I'll be back in a moment. Dow's down 1,257. We'll be right back. Thank you for that cheerful information, Mr. Chapman. My pleasure.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So just to finish off, what I've been talking about for a little while now is I said that based on crash metrics that I've always looked at, this is not the same chart in the monthly chart. Look, in 1929, from September, you just had this big red candle and you smash with another red candle and then another. This is different. We've had a couple of months of rolling over, and that makes this a very different chart. The result, I said, might in the end be the same. I'm not even discussing that. I'm just saying the charts, excuse me, at this particular point are very different. So now what I want to do is I want to save that. I don't want to make, I've been doing my best not to have this crash, my chart crash over the last month or so since I went away to Sydney, and I went right through the whole thing without the market, without the computer shutting down, with everything working out fine. So I want to keep that up. Okay, there it is. So now I want to get out of this, and I'm going to get out of this closed workspace. There, closed workspace. And yes, your VIX index is still hovering in the 40 area. So if Powell comes on today, and this is what I was looking at, if there is a sudden market rally today, we're down in the S&P 214, Dow is down 1371, the NDX futures are down 765. If there is a sudden turnaround today, that disrupts everything that I'm looking at, because what would be perfect is that there is a rally and then you close ugly. You don't have to close at this low, but you close ugly today. It really closes close to this low. And then you want the news, the media, there's just nothing else discussed. Everywhere you go, everyone's saying to you, oh, my 401k, or my whatever it is. It just, I mean, everyone, we all feeling it is, no matter how well protected you think you are, it's what comes next that really is a big worry. So the issue is that there's a chance that we get just a selling climax Monday, Tuesday. It's usually a Friday or a Monday, not always, but the serious ones. And then we get some kind of thing that says, okay, now the market has gone further than any disruption from tariffs at this particular point that we know of could do. Now you have to get some kind of equilibrium with the market trying to bounce, and all the hysteria just calms down a little bit, and then I think it comes back again. That's why I say this could be something it's not in flux, it is actually working, and there are moments where it'll come off the table and not be the major focal point for newspapers and the media and everywhere else. So now I had a question about the FXI, so now we can do stocks. There we go. FXI trading, huge down 7%, down 2.53 at 32.69. I've been warning. I said that double top of 38.73 twice on the 18th and 19th of March, or whatever it was, 2 days consecutive, 2 market days, and then gapping down says to me, you've got to be really careful. Not only that, in the pattern that I look at, the rectangle goes to a cup formation. You can go just above, right on, or just below the previous high, and then you've got to be careful, especially if you take out halfway of the wick, of the rectangle midpoint. So 37.50 was the high, 20 in the 28. I can't remember exactly what it is. I can see it right now. Let me move this over. I don't know why that. There you are. Yeah. So this is the iShares China Large Cap ETF. So whatever China is saying now, they're going to put money to work for investments and all that. All I can say is that most huge companies and certainly most countries are just looking at this and say, what do we do now? And that's exactly where we are right here. Look, there's the FXI. It's gone. Well, the week is young. We've still got a couple of hours to go. But so far, it has gone underneath the halfway marker of my rectangle formation, and that just says the 200-period moving average of 31.35 is next. I had a question about BYDDF. No, it was sent to me just to show me the look of the car. Thank you, Dan, for that. Yes, I saw a couple of them in Sydney, Australia. I didn't actually go in one, but I saw a couple. They very, very nice. Now they start to all look a little bit the same. That's what happens. That's what happens with SUVs. At a certain point, you can hardly recognize them. I always chuckle when I see a Jaguar and I'm looking at the back of the Jaguar, and I say, this could be a Honda. In fact, it doesn't even look as nice as the back of some of the mid-priced cars. And you can't make mistakes like that. Anyway, what I am looking at is BYDDY made that top. I called it a peak G/C. It looks a little bit like the FXI chart. Be careful because it is pulling back, regardless of whether the BID. The BID is the auto company in China, the largest, and certainly they sell the most cars. So it's pulling back sharply. So GM's going to get everything right. American cars, well, look what GM's doing. It's down 2.5 at 43. It's just taking out the left side low of March. On the 200-period moving average, it's within less than a point. Ford, look at that. So this is absolutely something that you just have to take seriously because I didn't get, now I can talk about it. I didn't get all the things that I was looking for the major top. I had my son yelling at me yesterday. He said, Dad, for 20 years you've been talking about when the real major top comes. This is it. He said, this is it. Everything, the institutions, the taxes, the everything I'm looking at, the 401k. So I said, well, Eli, you could be right. But it comes about with something that is a huge economic aspect. It isn't people spending money in the market and then losing that money in as you had in 29 with all the speculation, as you did in 87 with the speculation, as you did in the year 2000. This is something different, and we have to just treat it for what it is and look at the chart prices, and you're absolutely correct. It is very hurtful, and it is coming down. So now let's go back to the story that I wanted to go to here. So what is working? So I mentioned this yesterday, and I showed subscribers. I said, look, McDonald's has been moving up, and I don't think it can keep doing that because when markets come down, they kind of take everything with them. This is the Joe Granville market scenario where, there's your rectangle formation, 326.32 high on the 10th of March, pulls back sharply. Then it goes peak A, peak B, peak C, peak D, under the previous peak F. And that just says be careful. But yes, it has held well. Look at Coca-Cola. Look at that. Coca-Cola goes to an all-time high. All-time high yesterday. Up in the 74. Was that a round number? 74 yesterday. 74. Oh, I got a little note to say. We've got a break coming up. Good, I can hear it. I've got it, and I can hear it. 73.95. I'll be right back. Basil Chapman, Downtown 1400.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So there was an S&P 500 index, and I don't know if many of you know this, but it is something that has intrigued me for a while now, and that is the S&P 500 Low Volatility Fund. Look how it held. You know my rule of the rectangle. I've got webinars on my site. It's the rectangle, the large rectangle, the narrow rectangle. So look at this. Goes to a peak D at 75.43 on the 20th of March. Pulls back very sharply. Then in the rectangle formation, what you look at for is higher highs and higher lows, which should go, if that's the case, and walks the 9-period moving average, it should go to at least a peak D. And that D could be just under, right on, or just above the previous high. And then if it pulls back after that, takes out the halfway marker. Let me just draw this in here. Halfway marker. You've got to be very, very careful. But isn't it fascinating that it came within fractions? Look at this, 75.43 on the 20th of March. It ran up to a peak D yesterday. Just underneath, it went to 75.21. Let me just type that in here. 75, now you got yourself a double top. 75.21. Look at that, 75.21. And now you're down at 72.69, down $1.45. And you've got like a triple top in the weekly chart. The technicals are still, the 9 is still way over the 14, but the MACD is weak and the stochastic is weak, on-balance volume is weak. Monthly chart still looks fantastic. This is the S&P 500 Low Volatility Fund. So now I want to just briefly talk about the monthly charts, because now we've had the month of March conclude and we've got the very beginning of April. And I always look at this as if to say, if going into the end of a month, the last day or so, the market starts to pull back, whatever you're following, and the next month is very weak, now you've got yourself already a peak. If on the same month that it starts to go down, you make a high, well, you're okay. Well, in this case, this is, let me show you right here. This is a leg D in the monthly chart of the S&P 500 Low Volatility Fund, the SPLV. And in March, it went to 75.43. April, 75.21. So now that says that all of this month, it's got to close above 75.21 by 1 cent. And that continues leg D. But at this rate, this could certainly become a peak D. And this was a really important indicator to me, to say the low volatility indicator was rallying while the general market was moving down. Now everything is being embraced by this pullback. So a question came in about what shorts did you say you had? We have the SPXS, not enough, but we have the SPXS trading right now. We're in from 5.80 and it's trading at 8.97. And we have the DXD. Also there, not enough, but we're in it at 31.85 right now. We're in from 25. So all I can say is that we're going to just try to hold this as long as we can. Until I get all those climactic things going on, maybe, what if it's going to be Friday, and Monday, and usually the day that it makes the low, it goes even deeper. And here we are down 1,500 points already at 38,000 in the Dow. This is the one thing I can never do on potential. Remember back on March the 6th of 2009, where I was preparing to go long based on the DOG, the 1-to-1, short the Dow and the Diamond Index. And I said, I think this is going to be it. And we got long the very day of the low, March the 6th, the 9th, Monday. That was Friday. Monday was the S&P low at 666. And then what happens? You just never know. Are you going to make that V-shaped recovery that nobody can get in? Or do you have this arch? I don't want to go back to the chart. Or like in 1987, where you do make a low. The 19th was a horrible crash day, 506 points down. That was a crash day. Now we're 1,600 down. And what happened was, it made a lower low early in the morning the next day. Oh, it just tried to run it, and that was it. And then it was gone. But then it held at a higher level and made an H to M pattern. Didn't take out the left side low, but it then started higher. So you never quite know what you're going to get in terms of the reversal. But everything that I'm looking at now, you can go back to the VIX index. Look, the VIX index, VIX.X. is trading up 13 at 43.10. It's at 43. Remember, it was 40 when I started. Wasn't it 40 when I started my show? Yes. So now it's at 43. I don't know where it's going to go to, because 65.75 was the Japanese overnight fundraise. I don't know what it was, but it was a thing that caused the Japanese market to tank, and we tanked as well, and then we turned around. Okay. So Jeff says, alert, watch the gold. So GC, here we go. Gold is down 66. So this is like the other charts. This is now money's coming out of gold. So that means I must look at bonds. The bonds, at the highs, at 121.5. Yes. So this is what we're looking for. Now, what happened was in 1987, that was the high in bonds. That was a bull market in bonds, so that yields kept coming down. Right. So we're going to be watching this very closely to see what happens, because if this is the start of a new move up, then the 30-year T-bond H to M pattern in the monthly chart is going to need to break and close. It's a monthly chart, so I'm going to give it. Usually I give it a day, but it's. I need the week. I need a week for it to close above 130. 130. A close above 130 says you've now broken out. You're in new territory. Yields will keep going down. So this is something I have to take seriously. And out of left field, well, Trump's spoken about tariffs for ages and ages. It's the response. I always say, I don't care what's said. It's the market response. The market response is not just ugly. It is hideous. It is just brutal. Let's just look at EWH, that's Hong Kong, very sharply down. Let's look at EWU, which is the United Kingdom, which is holding quite well up until today. Big move down 2.3, down over 6%. Let's look at the EW. I want you to do EWZ, which is Brazil, down sharply, and that's they've got the commodities as well. Yeah, this is not good. Now I want to also look at the XL EW. No, I want to look at the. Oh, I know what to look at. IYT. That was it. IYT is the transports. Look at that move down 6.5%. Oh, that is ugly. Hey, everyone be careful. That's why we raise cash. That's why we have some shorts of insurance. You don't know what's coming out of left field here. I'll be back in a moment.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, let's have a scenario here. Powell's, I didn't know this, but I read in, I think, Tiger YouTube that Powell is going to be speaking at 11 o'clock Eastern time, I guess 11 o'clock. Let's just say he just calms down the market for whatever reason. So in the E-mini, it's at 51.97 right now. 52.63 is the 1 minute 200 period exponential moving average resistance. 52.63 is the 52.63, then 53.58 is the 200 period moving average in the 5 minute, and it hasn't been there for quite a while. And the is 5421. Those are levels. I mean, it looks like they're outside levels at this particular point. But we've had really sharp reversals for a while now. One of the reasons why it was difficult to add to the short position, because you just kept having these sudden big spikes. For instance, we were able to get, we didn't take the full thing, but there was a 4% gain in the 3 times long on Wednesday, UDOW. I mean, that's 4%. That used to be a decent amount. Now, of course, you're down in a day. What are we down here? We're down 3.5 in a day. So just keep in mind that any rally, I would prefer, I say this and I don't want to say it, but I have to. I would prefer that we close ugly today, and then Monday is just this, it's capitulation day. And then we have a pretty, I don't think that's it, that's the low, but it'll be a substantial low that says you might not go all that far to the upside. You might go initially, but then you might stall, but you won't break down. That to me is a scenario that I can consider. And that's the reason why I wanted to keep, if we can, we wanted to keep some of our positions the long side, because we got in so nicely on the short side at their lows that it's, I don't want to, I still would like to be in, but mostly we've just got out, we've got cash. I'm waiting to put it to work, and I don't mind putting to the short side on any really big, strong rebound that looks like it's going to fail. So it's always better to have the cash in hand, because just right now,